Greetings, everyone. This is Cindy Smith. I am a regional fiscal consultant with the Office of Local Finance. I thank you for watching this webinar today around year-end close and reporting. I would like to take a moment to highlight the strategic plan regarding the three focus areas. The first focus area is academics, ensuring all students have access to a highly effective education regardless of their zip code or individual needs. The second focus area is whole child, recognizing and addressing student needs outside of academics. The final focus area will highlight educators. We need to ensure we are developing, recruiting, and retaining the best educators. Year-end close and reporting. This presentation will be a four-part presentation. We will start today on the agenda, part one of year-end presentation around preparing books for year-end close. In preparing books for year-end close, the goal is to close books and submit all balanced and approved final expenditure reports in ePlan by August 1st. The fiscal year runs from July 1, 2019 to June 30th, 2020. First, in early July, make sure you reconcile your books with the trustee or your bank balance. Then review and adjust balances in your local books for your liabilities, expenditures, assets, revenues, and reserves. Reports used from your accounting system to review this data are balance sheets or trial balance, summary financial statements, statement of revenue, and statement of expenditures. Liabilities at year end. Please do not wait until year end close to reconcile payroll liabilities. These should be reconciled monthly throughout the year. You want to avoid any negative liabilities on your balance sheet. While reviewing payroll liabilities, which include your federal income tax, your Social Security, Medicare, and retirement liability accounts, these should zero out once payments have been made to the IRS and TCRS. For health insurance and other payroll liabilities, if you withhold a month in advance, liability balances should equal the next month's invoice. If you're an LEA and you withhold for the current month, liability balances should zero out following payment of the invoice. What is an accrual? It's an entry on your books to recognize revenue earned but not yet received, or an expense incurred but not yet paid. In order to prepare your books for year-end close, you may need to accrue both revenues and expenditures. The purpose of these accrual entries is to match revenues to expenditures for a particular fund or grant within the same fiscal year. An accrual is made using a journal entry. For a revenue accrual, you will debit the receivable account and credit the revenue account. For an expenditure, you will debit the expenditure and credit the payable account. These are some examples of expenditure accruals. What this means is these expenditures were not expensed through accounts payable or payroll as of June 30. You will accrue any payroll that was not processed prior to June 30 by debiting expenditures and crediting 21100, which is accrued payroll. You will accrue indirect costs not paid prior to June 30th by making the following entries. In federal, which is Fund 142, you will debit 99,100 504, which is indirect costs, and you will credit 21,500 due to other funds. On the general purpose side, which is Fund 141, you will debit 11440, which is due from other funds, and credit 49,800, which is transfers in. If you do not encumber purchase orders, you will accrue them by debiting the appropriate expense line items and crediting 21,100 accounts payable. Now we will move to general purpose revenue accruals. All LEAs will need to estimate local taxes received through the trustee and set up the necessary revenue accruals. County systems accrue revenues on July's trustee report. If you're a special school district, you accrue revenues on the June's trustee report and accrue estimate of taxes for July. If you're a city system, you may need to accrue 1, 2, or 3 months of local taxes, depending on what your auditor has required in the past. You will need to analyze the local option sales tax, which is revenue code 40210. Many districts find it helpful to look back at previous year's revenue to get a good estimate. Make sure you accrue the additional months so that you end up with 12 months of revenue on the books. The journal entry for accruals is a debit to 11430, which is due from other governments, and a credit to the appropriate revenue accounts. If your final BEP payment was received in July, make sure to accrue this payment. You will debit 11430 and credit revenue 46511. Please be sure to set up revenue accruals for general purpose grants as well. You can review this by comparing year-to-date expenditures to year-to-date revenues in general purpose grants. These include volunteer pre-K, coordinated school health, family resource center, and any other grants that you run through general purpose fund. This is an example for comparing the volunteer pre-K state grant revenues and expenditures. If you have $205,000 budgeted for revenue and expenditures, you would then look at your actual year-to-date expenditures, which in this case is $205,000. Then you will look at your current year-to-date revenues that you've received as of June 30th. In this case, it's $190,000. So how you get this calculation is you take $205,000 that you have in expenditures, you subtract out the revenue that you've received as of June 30th, which is $190,000, and this is going to leave you $15,000 that needs to be accrued and requested. The journal entry to accrue this revenue is a debit to 11430 due from other governments and a credit to 46515, which is revenue for early childhood education. Remember, you cannot request more than the grant allocation. You will do the same analysis, the same example that we just did for all grants in the general purpose fund. Now we're going to move on to federal project accruals. After all expenditures through June 30th, including final payrolls, accounts payable, and indirect costs that we covered in the previous slides have been expensed, we need to look at all federal grants in E-Plan. Make sure to account for all your year-to-date expenditures for each federal grant. You will need to set up accruals for the following two scenarios in these federal grants. First scenario, for each federal grant in E-Plan that has not received payment for the reimbursement request prior to June 30th. The second scenario is the final reimbursement request that may generate as a result of completing your final expenditure report in E-Plan. The journal entry needed to accrue these federal grants is a debit to 11430, which is due from other governments, and a credit to the appropriate revenue account. For all federal grants in E-Plan and grants outside of E-Plan. This is another example to compare year-to-date expenditures to year-to-date revenues. We're going to use this federal grant called XYZ grant. We see that we budgeted revenue expenditures for $150,000. We have actual expenditures of $150,000. However, in current revenue that we received as of June 30th in the appropriate subfund, we've only received $125,000. So we look at our expenditures, which are $150,000. We're going to subtract out what revenue that we've received as of June 30th, which is $125,000. This leaves $25,000 in revenue that needs to be accrued and requested. The journal entry to accrue revenue is a debit to 11430 and a credit to the appropriate revenue account. You would do the same analysis for all subfunds in federal projects. Career ladder at year end. In general purpose, you must adjust your career ladder reserve. These are the 7 steps in order to start this process. Step 1, from your trial balance, get the amount of beginning career ladder reserve. In most systems, this balance is in account 34560, which is restricted for instruction. If it's a debit balance, you're going to treat it as a negative. If it's a credit balance, we're going to treat it as a positive. Second step, get year-to-date revenue from the account 46610, which is specifically for career ladder revenue. The third step is you're going to run a year-to-date expenditure report for Object Code 117, which is the career ladder program. The fourth step is determine the total expenditures in Object Code 117 for your regular full-time personnel and total expenditures in 117 for your retired personnel. The fifth step is you're going to multiply the amount for full-time personnel times the full benefit rate, which currently is 17.95%. The sixth step is you're going to multiply the amount for retired personnel times the Medicare rate, which is 1.45%. And the step 7 is you're going to perform this reserve calculation. This is an example for calculating the new career ladder reserve. We're starting out our debit balance with $3,543. So we're starting a debit balance in 34560 for this negative $3,543. We've got $80,000 that we've paid out to full-time personnel in Object Code 117, and we've got $5,000 in payments to retired personnel in Object 117. So we're going to take our negative beginning balance of $3,543. We're going to add $100,000 because that's the revenue that we received in 46,610. And we're going to subtract $94,360, which includes the $80,000 that we paid out to full-time personnel, times their benefit rate. Then we're going to subtract out $5,072.50 because $5,000 was for our part-time personnel. We have to multiply the Medicare rate. If we calculate this, a negative $2,975.50 becomes the new ending reserve for Career Balance, for Career Ladder. In order to make the journal entry to adjust the reserve, you will calculate the variance between the beginning and ending reserve. So in this case, we're going to take our negative $3,543 and we're going to subtract $2,975.50, the new ending reserve, and the difference between these two negative reserves is $567.50. And the entry that we need to make for that amount will be a debit to $39,000 and a credit to $34560. Other year-end reserves for general purpose. You will perform the same reserve calculation for all committed and assigned reserves on the balance sheet. The journal entry for reserves will be a debit or credit to the reserve amount of adjustment. The other side of the entry is a debit or credit to $39,000, which is unassigned fund balance. Other journal entries, school nutrition. If you have centralized cafeteria, you will enter the year-to-date value of your USDA commodities by making a journal entry to debit $73,100,469 and credit $47,112. Adjust your value of food inventory by making a journal entry to 11200 and inventory reserve, which is 34220. If you have investments, adjust the account to June 30 balance. All receivable balances should equal the sum of amounts accrued for the fiscal year. Now, year-end close, this is just a final review. After you have made all adjusting entries, 1, please review your balance sheet to ensure that you have the correct balances in your assets, your liabilities, and your reserves. The second step, review statement of revenues. Compare budgeted to actual by line item and make sure there are no other additional revenues earned that need to be accrued. The third step is review statement of expenditures. Again, compare budgeted to actual by line item and make sure there are no other additional expenditures incurred that need to be accrued. The last step is you will now follow directions provided by your accounting vendor to close your books. This concludes part 1 of this presentation. Thank you guys for listening.